moderator, Ms. Emily Tan, anchor and senior correspondent, CNBC International, with experts from DST Global and Qiming Ventures Partners. Thank you.
Good afternoon, ladies and gentlemen. Thank you very much for joining us here today. And I'm joined by two gentlemen. To my right here, John Lindfors, DST Global co-founder and managing partner. And to his right, Duane Kuang, Qiming Venture Partners founding managing partner. And we're going to spend the next 25 minutes here talking about tech megatrends and the next $1 trillion asset class. And of course, I will begin our discussion this afternoon on artificial intelligence. John, my first question goes to you. Of course, when you think about AI, the first company I think about is NVIDIA, officially becoming the first company with a $5 trillion market cap on the back of course, a flurry of tech announcements at its GTC just last week. But also, we're looking at the middle of a trade war, what's going on between China and the United States. I want to get your take. With this huge run-up and this interest and demand for AI, are we in a bubble?
I think that the AI opportunity is probably the most important technology trend that we've had ever. So I think that it's hard, not to underestimate it. So I think that it's an absolutely massive opportunity. I think that it's the most interesting time ever for founders to build different things because they really have the tool to build absolutely amazing applications. So I think that the opportunity is definitely there, and we're not talking about the next 24 months or 5 years or 10 years. This is 20, 30 years, and I think that it's actually an amazing time for founders, very interesting time for investors. But that being said, as we saw back in 1999, 2000 in connection with the dot-com bubble, financial crisis, which didn't really impact the tech sector, I think that there are many companies that will fail. When you have hundreds of billions of dollars being invested annually, it's impossible for all of those to work out. So, are you in a bubble? I think that a number of companies are not going to make it, but I think that the few that will make it will become some of the biggest companies in the world.
So we want to continue this discussion about AI bubbles. And my question, Duane, we're seeing signs of stabilization between China and the United States following the Trump-Xi summit last week. Do you share the same optimism about potential sales to China? Can you weigh in on the bubble discussion?
Sure, yeah. I agree with John that the AI opportunity is a once-in-a-lifetime opportunity. So is there a bubble for a certain company between its current valuation and the results of the next quarter? I would say yes. Is there an industry-wide bubble? No. And more importantly, we invest primarily in China. There is certainly not an AI bubble in AI-related great innovative companies in this part of the world. So I think overall AI is still underinvested, underappreciated in this part of the world compared to that in let's say, the US. Am I optimistic in terms of AI technologies being slightly more free to flow across border? I would say slightly more optimistic. But even without that flow of technology, China in itself, it's a huge market, and there are plenty of fantastic scientists and so on and so forth in China. So I think the AI will happen one way or the other in this part of the region.
I would add one more thing, just to put things in perspective, because I think that there are certain similarities. If you look at the dot-com bubble in the late 90s, and this really impacted the US more than any other part of the world, you had hundreds of companies that went public, if it's not 1,000 companies. 99% of them don't exist anymore. But companies that went public at that time include Yahoo, eBay, probably more importantly, companies like Google and Amazon. In China, they weren't going public just yet, but Alibaba, Tencent, Baidu, they were all formed at this point in time. So 99% of the companies from back then went under. But if you look at the combined market cap of just those 6 companies, it's around $8 trillion. So I think that's how people should think about this, that there are companies being formed right now or growing right now that will be very, very important 5, 10, 20 years from now. But obviously, not all of the founders are going to be successful.
So you just named some huge tech startups. Well, they were startups then, and now they're huge players in the game. Microsoft, Google, Meta. Would you prefer large established names or pure play AI?
So we as a firm, we only invest in private companies, so we don't really invest in the public companies. But really sort of the initial beneficiaries of this AI boom has, to a large extent been public companies, at least in terms of value created. Of course, NVIDIA, the best example as sort of the supplier of the vast majority of compute to all of these companies, but also Microsoft, Google, Meta, Amazon, they've all benefited from these trends. And most of their market caps are up by 100% or more in the last couple of years. But then you look at some of the companies that have emerged to really become the biggest private companies, OpenAI, Anthropic, Cursor, all of these companies have really been able to carve out very significant niches in the market, despite the existence of these big companies that you'd think will just dominate everything. So I still believe in the entrepreneur. The innovator's dilemma is real, and very often these big companies, they're held back by bureaucracy, slow decision-making processes, etc.
Duane, I want to get your take. Do you think that the large incumbents will be the biggest beneficiaries of the AI revolution, or are there opportunities for startups?
Short answer is definitely opportunities, and great opportunities for the startups. I think in every technology revolution, some incumbents will be able to cross over from the prior generation, the prior era. And a big swath of incumbents will be washed away. And along the way, startups who were nimble, who were doing things that were impossible because the technology simply wasn't there during the prior era would emerge. So if we look at going from internet to mobile internet, if we look at great Chinese companies, some crossed over and became successful. Alibaba and Tencent, they were big players in the internet era. They continued to be successful and so on in the mobile internet era. There were many big, successful Chinese companies during the internet era who simply were not able to make the successful transition to mobile. There were also great mobile internet companies that came about because of mobile internet, i.e. Xiaomi, ByteDance, and so on. So I strongly believe the same thing will happen in AI. Even if we look at the US market, I wouldn't call NVIDIA an incumbent. Intel was an incumbent. NVIDIA is still a disruptive company that were able to capitalize on the emergence of AI and became a $5 trillion company. Before AI, they were a great GPU game company, right? So I think the same thing will happen in AI in this part of the world for companies that we were just hearing these days, or for companies that we haven't even heard about.
So how do you value an AI company when traditional PE doesn't always apply?
So there are a number of ways that we do, and it's not different from prior technology revolutions. Number one, for companies that are making some revenue, decent revenue traction as our peers in the US, PS is usually a measure rather than PE, and but for even earlier stage companies where there isn't even revenue per se, then we tend to look at a few things. A, we look at the potential that the company is trying to address, and very heavily rely on evaluating the team, whether or not they will be able to successfully execute the plan to address that huge market potential that they painted, at least on their PPT, right? So I think it's both a science and an art, and our industry has come a long way, and every generation we do the same thing, and we get asked the same question. Somehow, at the end of the day, it works. The winners at the end will prevail, and whether or not the entry valuation in year 1, year 2 is 10%, 20%, higher, lower, it doesn't make a whole lot of difference at the end of the day. It's that opportunity as the end game that matters.
Do you have any thoughts when you look at these AI companies?
So I think that we think about this in a very similar way to how Duane and his team think about it. I think when you look at, first of all, I would say that probably 70 to 80% of the companies that we invest in are generating revenues. So really when you generate revenues, you can analyze a lot of things, unit economics, retention, you can do all kinds of analysis. And really what you try to do is sort of come up with a model, which by the way is always wrong 5 years later, but you try to come up with a model that at least you sort of know what the potential pitfalls are, what the potential opportunities are. And that's what we try to do. But we do invest in pre-revenue companies. Kuaishou is a good example. We led around in 2015 at a valuation just under $1 billion pre-revenue. And I think that back then, 10 years ago, that was very unusual to invest at $1 billion valuation pre-revenue. And I think that there we relied on, a lot of user data that we could analyze. But essentially what we're backing are founders and founder teams. So you have to get to know the founders, and you invest if you come to the conclusion that this is a team that even if this particular product that they're working on right now doesn't necessarily work perfectly, that they are smart enough, aggressive enough, iterate frequently enough, quickly enough, that they can sort of figure out how to move the business in another direction. And by the way, one company that we invested in together that we were just talking about before we came on scene was Xiaomi. And if you look at what Lei Jun started with 12, 13 years ago when we invested in the business, it turned out to be, and by the way, this was actually pre-revenue for both of us, it turned out to be very different. I think that what he has done with the business, he and his team have done with the business, with EVs, etc., I don't think that we could ever have included those in our model.
You didn't even include that in the PPT, right?
Exactly.
It was meant to be an internet company. We saw it as a smartphone company at the time that we listed, and of course I was talking to you, Duane, on CNBC about that very fact. The company was marketing itself as an internet company. Now, as you're talking about Kuaishou, talking about Xiaomi, Duane, is there an investment gap in AI in Asia compared to the United States?
Yes. We believe AI is a universal technology that's going to make fundamental and revolutionary difference in the whole of humanity. And China being the second largest economy in the world, right now I strongly believe that AI is underinvested. The Max 7 just announced their quarterly earnings results just recently. If we look at many of the Max 7 infrastructure capex investment, they were all in the approximately 100 billion per year. I think 60 to, let's say, slightly over 100 billion per year for 2025. The Chinese big internet companies have not, many of them have not announced their latest results yet, but if we use the prior quarter results, the capex investment are in the tune of, let's say, 5 billion, 3 billion per quarter versus the 30 billion, 50 billion-ish per quarter investment of the US counterparts. And the biggest one is the private company, ByteDance, right? 25 billion US dollar investment for the whole of 2025. And that's not counting the private companies, i.e. the Stargates of the world for OpenAIs and so on. So if we aggregate the infrastructure investment into AI in the US, compare and contrast that to that of the Chinese investment, it is at least a 10-to-1 ratio. And we all see what happened during the mobile internet era, where great Chinese mobile internet companies, great Chinese consumptions, and so on and so forth came about. The market size for AI, I would imagine, compared to that of the US, maybe a bit smaller, but not 10-to-1, not 20-to-1. So the space is certainly deserves a lot more investment, a lot more attention.
I would add another sort of interesting thing, just based on what I would say is sort of probably more anecdotal evidence. But when you talk to AI application companies in the US, in Europe, and Asia ex-China, many of these AI application companies, they obviously use these models, but many of them use auto-routing. So for example, for the most complicated tasks, they might use Anthropic or OpenAI's model. Perhaps more straightforward tasks, they might use DeepSeek and Quen, also in the US, just because the token cost to use open source models like DeepSeek and Quen's model is perhaps 1/8, 1/10. So, entrepreneurs around the world, they are going to use whatever model makes more sense for them. So I think that that's also an interesting thing. You can try to legislate different things from a geopolitical point of view, but private entrepreneurs, they're going to do their utmost to figure out how to use these models in the best possible way for themselves to offer a great product. So I think that that's quite exciting that the entrepreneurs, regardless of where they are, I think that they can build on different models.
I'm curious to know, we talk a lot about China, US. Are there any multi-billion-dollar markets in this region, in Asia? Any countries that are doing well?
Well, I can have a go first. First of all, obviously, China is by far the biggest and most important market. Just given the size of the economy, just given the incredibly high quality of entrepreneurs and the crazy competition that you have. So I think that we're going to continue to see a lot of interesting companies coming out of China, of course. But I think that there's a lot of innovation going on in countries like South Korea, Japan, Indonesia, many building out of Singapore for Southeast Asian markets, and of course India as well. So you see interesting company formation and startup growth in all of these markets.
Any thoughts, Duane?
I think when it comes time for more widespread AI deployments, the opportunity sets in countries ex-US, ex-China would be more obvious and apparent. Mm-hmm. During the phase when AI is still at the more foundational levels, at the infrastructure levels and so on, I think these are probably the two countries where most of the bets will be placed. But since AI is going to disrupt and change everything, I think hospitality and everything. So by that time, there certainly will be multi-billion-dollar companies that will utilize these great AI technologies to disrupt industries in the ASEAN region, in India, and so on and so forth. So, but we primarily look at China for now.
We're also comparing open versus closed AI. We just heard from President Xi Jinping in his wrap-up at APEC, where he was proposing a global open cooperation organization, talking about open source. So where do you stand in terms of the battleground, open versus closed?
I think that there's room for both. I think that obviously, if you look at AI application companies that build on these models, the vast majority of the AI application companies that are generating significant revenue to them today, most of them in the US, they are building their solutions on closed source models, like OpenAI, like Anthropic. But many of these, as I mentioned, many of these application startups, they're also using Qwen and DeepSeek, which are really sort of the two most important open source models. Open source being both open source and open weight. Because a lot of companies, they say that they have open source models, but they're not really open. They're not open enough for companies, in many cases, to build on. But I think that there's an opportunity to have both. I think that these closed models, I think that some of these companies, they have to keep them closed because they need to monetize them aggressively in order to support the CapEx. But I think that long term, I think that there's an opportunity for both.
What is the biggest risk to the AI trade?
Biggest risk to the AI trade, I think you mentioned some of it on the outset. Is there a near-term valuation exuberance, bubble you call it, near-term, right? So I think if we are trading in the public market, there could be some of these risks. But again, if we take a longer time frame horizon, if we look at more of an industry view, i.e. money that goes into this particular industry and money that you can get out of this industry, company agnostic, then I think we're still in the early innings.
I want to spend some time talking about other technologies. What about stable coins or cryptocurrency? There are 11 jurisdictions that have regulated stable coins: Hong Kong, Japan, Singapore, UK, US, and UAE, just to name a few. John, what is the role of stablecoins?
So I think that, first of all, I think that it's very, very exciting that you have major economies and major financial centers actually regulating stablecoin. I think that it's a massive opportunity for fintech companies and also established financial services companies to basically build on stablecoin. It allows immediate transfer of value. So we see a number of companies building very, very exciting businesses based on stablecoin. So I think that it's a great innovation. Obviously, they have been around. The big ones have been around for many, many years now. But we're really now seeing a massive adoption of that by companies that are using stablecoin really as rails. So I think that that's very exciting. Also here in Hong Kong and in this Asia region.
Duane, Hong Kong just legislated on a stable coin. Is it economies with advanced financial infrastructure? Is it those jurisdictions that set the pace for development of the industry?
I think you're right. The more advanced, sophisticated financial markets should set the pace. But in terms of wide adoption and real world applications, they tend to be in the less developed financial markets where cross-border transfers are more expensive and more challenging, difficult, less efficient. But I think setting the ground rules and setting the framework should start from the more financially sophisticated market. And I'm glad to see regulators are embracing it and stepping in rather than fighting it and then having two camps saying words that cross each other. So.
I want to move on to biotech because I want to cover all three of the different industries that we were supposed to talk about. And Duane, the risk reward between established pharma and biotech startup, how do you choose? So
we are a big investor into innovative biotech companies and pharmaceutical companies. It has been a fairly widely known, not so much secret, that a lot of the true early stage innovation still happens at the startup stage. And where well-established pharmas have great platforms in completing the clinical trial and in going to markets and promoting a drug and so on. A lot of the early innovation happens at the startup phase, and many of the blockbuster drugs ended up being acquired by the large pharmas from these startups. So we feel there's significant value, unfair amount of value to be created at the startup stage. So we're excited about that, and we'll continue to invest into that area. And what's also interesting is that area is also much less politically charged. You know, how can you challenge and not be welcoming a new drug that's developed in one part of the world that can address disease in the entire world? So we believe in the early stage pharma in this part of the world has a long way to go.
Do you invest in a company with one single promising candidate or one with a platform technology that can generate multiple products?
So that's a great question, and it is something that we look internally quite a bit. We certainly would favor investing into a team that has a platform technology that could be applied to multiple candidate drugs. And but amongst the multiple candidates, we certainly we tend to look to like maybe one that has the biggest markets and so on. So yes, we do look at one particular drug, but the company would hopefully have a platform that could give it multiple tries and multiple possibilities.
So we've touched on AI, stablecoins, and pharmaceuticals, biotechs. I want to leave some time for your final thoughts here, and I want to take out the crystal ball. If you were to look 20 years ahead, I'll start with you, John. Which sector, AI, biotech, crypto, has the potential to create more fundamental value for society and long-term investors?
They're all interesting areas, but you know, if I can only pick one, I would pick AI.
Why?
Why? I think that it's going to permeate the other sectors as well, and I think that we're just at the very beginning of AI really spreading across society, with I think a lot of positive benefits that it will bring along with it.
How about you, Duane? Same question to you. If you were to pick one that could impact an investor's pocketbook, or change society, which industry would it be?
I would agree with John. I think AI has the potential to fundamentally disrupt many industries, including the other two that you mentioned. So for instance, we invest a lot into AI in drug discovery. So is that a biotech pharmaceutical company, or is that an AI company? So if we go with the AI theme, I would certainly say AI has the biggest potential in our lifetime to generate significant value as well as do good.
Gentlemen, thank you very much for the time today. We spent a lot of time talking about AI, and of course, both of these gentlemen here think that it is the future in terms of their investment. We've been speaking with John Lindfors from DST Global and Duane Kuang from Qiming Venture Partners. If you could please put your hands together and help me to thank these gentlemen. Thank you very much.
Thank you.
Ladies and gentlemen, now it's time for a small F&B break, and you can go to the food hall. Remember to keep connecting. We have